It's rare that insiders will buy unless they think the stock is going up. So it always is helpful to have, a degree of skepticism about any signal, about any situation. And I'll tell you, one of the biggest pitfalls of following insiders is that they can be guilty as anyone of wishful thinking. In fact, as a rule of thumb, we would classify CEOs as probably the most susceptible to wishful thinking.
This episode of Mining Stock Education is brought to you by Orin Resources. Orin is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to aurinresources.com. That's AURYN resources.com. You are listening to Mining Stock Education. Welcome back, and thanks for tuning in, ladies and gentlemen. I'm Bill Powers, your host. Well, my guest today is Ted Dixon, co-founder and CEO of Inc. Research Corp. Inc. stands for Insider News and Knowledge, and Inc. Research is Canada's first online financial news and research service dedicated to providing data on public company insider trading. Ted joins me today to discuss insider and institutional buying and selling, and how investors can use this information to help find potentially good investments and determine whether they should be buying or selling a certain stock. So Ted, thanks for coming on the podcast.
Bill, thanks for having me.
Well, you focus on monitoring insider and institutional buying and selling, and you also are based in Vancouver, and you know a thing or two about the junior mining industry. But I'd like for you to share regarding your professional background first, and why did you come to found Inc. Research?
We found the company back in 2004. Both myself and Henry Chan, who runs all the technical and database side of the business. We both worked at an investment management firm called Connor Clark Lunn, which is a multi-billion-dollar investment manager here in Vancouver. But when we saw the Canadian regulators get their act together and provide a database of insider trading activity. Now, what that means is if you're a CEO or a CFO or a director of a company, starting back in 2004, basically, you had to file all your trades and your ownership on one unified database in Canada that would record insider activity. So this is all legal insider activity that, I shouldn't say legal, it's all legally above board type of reporting of insider trades. When you're an insider, you just have to file what you're doing with your shares. And we were able to capture that starting in 2004 in this new database at the time that the Canadian regulators had set up. Before then, Bill, it was all kind of a patchwork, different provinces. You had one province that used fax to if you wanted to find out what an insider was doing, you had to do a fax request, and they would fax you back the information. So it was all kind of a big old mess. But they fixed things up in 2004, and they did a pretty good job. We've got a really good insider reporting system in Canada in terms of its ability to capture data, and we've done the best we can, we think, in taking that data and putting it into a context that investors can use. So if you just go to the database that the regulators have put together, it's kind of a bit of a mumbo jumbo of data. We take it and we sort it and store it and put it together with other data, stock price data, fundamental data, technical data, in order to analyze some trends that are appearing in terms of what insiders are doing or aren't doing, and what's going on with the share price.
Could you define for us legally what is an insider, and then what documents are they legally required to file?
Well, in Canada, I guess the best way to characterize an insider is if they have significant impact on the direction of the firm, so strategic or financial, you're really an insider. So you can't really not really supposed to skirt the rules by saying, well, I'm a consultant, but you're really running the company. If that's the case, you're still an insider. Also, if you own 10% or more of the company, you're deemed to be an insider. So that's basically who gets captured in the system in terms of having to file. And but basically in Canada, they're able to. You have to file within 5 days of your trade. That's compared to 2 in the U.S. but it's generally, I think, in the U.S. it's 2 business days. Where in Canada it's 5 days. So it's pretty competitive with the U.S. system, and there are some exceptions here and there, but for the most part, if a CEO or CFO or director is selling or buying stock, you should know about it pretty quickly.
And then there are the blackout periods. Can you explain what blackout periods are?
Blackout periods are actually best practice periods where an issuer would tell its insiders, okay, no trading until we release, for example, our quarterly report. So if they're going to, for example, when Apple is going to release its quarterly reports, which I believe it's doing today, the insiders would not be able to trade in advance of that on a discretionary basis. Now there are plans where they can get approval that they can, they give it automatic sales and the like. But in general, you're not supposed to kind of just decide you're going to sell a bunch of shares in a blackout period. That's in order to ensure that an insider is not benefiting from, I got a sneak preview of the results, I'm going to buy or sell. That's what those blackout periods are for. Now in mining, it's a bit different. In that quarterly reports in a lot of junior mining companies don't really mean much. The company's not making any money and they're out drilling. What the blackout period should be was, once the results of any drilling come in, there shouldn't be any trading until those results are put out into the public market. So there should be there should be a blackout period. And if an insider were, to get wind of the results of a drill and to trade off of that, then they would be in some hot water with the securities regulators.
One thing I've observed when either good or bad drill results come out on a junior exploration company, I like to go back and look at the stock chart to see how the stock was trending, going into the release of the assays. And sometimes when I see them trending downward into the release of assays, I think to myself, there were some loose lips somewhere. Do you have any commentary on what you've observed in the junior mining sector regarding that?
I think it does happen from time to time where you can detect some sort of some sort of an anticipation. But to be honest with you, Bill, I think in a lot of cases it's just the market kind of the wisdom of the market kind of preparing itself. Yes, there are isolated cases where there have been, I think, some situations, but in general, the insiders know that the regulators would be pretty much on the case if they were to take advantage of it, and so we don't see a lot of it, but certainly the market will try and anticipate what's happening. And I think it doesn't just happen for junior mining. It happens just about in every industry.
So when you see an insider buy, that's publicly reportable knowledge. We have that fact, that piece of information, but just like a word in a sentence, the word has a semantic range of meaning, but the specific meaning of the word is determined by the sentence and then the paragraph that encompasses the sentence. So when you correlate that analogy over to the insiders buying of their shares or selling of their shares, how do you contextualize that to ascertain what that means?
Okay, so since I think the focus of your audience is junior mining, I think there's a couple of, I would call kind of rules of thumb that you want to look at when it comes to insider activity in junior mining. Okay, the first is a liquidity event type activity, Bill, and that is the company releases drill results and the stock pops. Okay, well, you want to find out, are the insiders dumping all their shares on that pop, right? And that is generally the bells are going off at that point for me, saying, this stock is coming back down. And if you see, significant selling, if you see more than one insider selling and jumping on this liquidity event, then that's usually a signal to take some money off the table along with them. The other, though, is an example of when maybe drill results didn't meet market expectations, or the market got ahead of itself, and then there's a sell-on news. Well, you want to go and you want to find out if the insiders are buying the dip. And that would help signal that the market has overreacted, that the insiders have a more, a stronger confidence in the longer-term play that's going on, that the market hasn't analyzed the results properly. So it is a good way to determine whether there's any interest there amongst the insiders to pick up an oversold stock. So you want to look at both the high-flying and the low-flying situations, and what are insiders doing. You want them buying the dips, and you don't want them selling the pops.
When you look at an insider buying and purchasing shares of their company, and that could for that to indicate that would be possibly a good buy indicator for the average investor, do you look at things like that individual's buying versus their personal net worth, if that information is available, or their buying versus the overall direction of the stock, or the amount they bought versus the market cap of the company?
Well, in the work that we've done, we haven't been able to determine a strong signal based off of the relationship between the amount bought and the person's holdings or net worth. What we do look at, though, is the timing of the amount, the timing of the buying, the intensity of the buying. Our experience, basically, particularly in Canada, is that it's rare that insiders will buy unless they think the stock is going up. So it always is helpful to have a degree of skepticism about any signal, about any situation. And I'll tell you, one of the biggest pitfalls of following insiders is that they can be guilty as anyone of wishful thinking. In fact, we would well, as a rule of thumb, we would classify CEOs as probably the most susceptible to a wishful thinking,
as the visionary.
Yeah, the visionary, and CFOs as being the least. So when you see CFOs buying, that's a really positive sign, because they hardly ever buy, and they're always conscious of the bottom line. And if they're open up their wallets, that's usually a pretty positive sign. It always catches my attention when I see a CFO buying. When there's a CEO buying, you like to see others in the company buying along with that CEO. Every situation's a bit different, though, of course. And you also have to look at their other holdings, and you can do that a little bit easier on Inc. Research, which is our paid subscription service, than CanadianInsider.com, which is our free service. But once you get to know an insider, you know what other companies they hold. What are they doing with other companies? Are they well diversified, or are they really betting the farm on this one play? And I'll give you a prime example of a well diversified insider is the Eric Sprott, who's heads up Kirkland Lake Gold. Now he has his wealth tied up into many different companies in the mining space. So he's taking a diversified approach. So a purchase or a sale might be interesting, but you just have to realize that he is well diversified, and he's not betting everything on one play. So just because he's buying in a certain stock, well, that's a positive sign, but it's a positive sign, based off of a strategy that's taking a diversified approach in the market, and it's not necessarily, I would say, a slam dunk that particular play is going to pan out. But it's still important to see what somebody like him is looking at. And once you understand sort of the type of plays he's going after, well, then you can maybe it can maybe help provide some context for you as an investor. Is this another stock I should look at? Bearing in mind that Eric Sprott, for example, is invested in this stock, but doesn't have all his eggs in one basket. What is interesting right now, he's taking some money off the table at Kirkland Lake Gold after a fabulous run. The stock has doubled in the past 2 years, and he's taking some money off the table. And so now we're watching, where is he redeploying some of that money, and that's going to be very interesting going forward.
And I think for the average investor too, when you see an ultra high net worth individual like an Eric Sprott put $1 million or $2 million into a junior explorer, you want to put that in the context of his personal net worth, because he might invest $2 million, and that might be the equivalent to $1,000 or $5,000 or $10,000 to the average person.
Well, that's right. And again, he's well diversified in the space. So, one may be thrilled about a certain story that he's invested in, but don't allow that one trade by that one individual to sort of overweight your enthusiasm for the stock. But try and look and see, put it in context. Okay, well, what Eric Sprott is buying this stock, but he's not. He's not moving all his money into it, so it's a good way to put some context around what insiders are doing by exactly like you say, how much of their overall strategy is going into this. And then you've got other examples where CEOs, they're focused on one company, and they're basically betting it all on that one company. So there's a high level of conviction there. There's a strong signal, but you also have to then ensure that the insider is not guilty of that wishful thinking we've talked about. And that's how do you help mitigate that while you look to see what are other people in the company? Are they with the CEO, or has he got a team around him that's also got good holdings and good interest in the company? And that's that's one thing we would look for. So in our Inc. Research subscription service, what we do is we rank companies in Canada based off of not only their insider commitment, but also their valuations and their price momentum. So this helps to put the insider situation in perspective. So if a stock is very cheap and the insiders have a strong commitment in that stock, that's a positive sign, even if the stock price is languishing. That would be a good signal for value investors. If the stock is soaring and insiders are still buying, that's even a better signal. That means that they believe in the growth opportunity. Now, why that approach can help mining investors is that it gives you a unbiased view based off of the data that's publicly available that we bring together that can allow you to put what the insiders are doing in context. What it does not do is put it in the context of the geological science and work that's being done. That requires fundamental analysis. We do not provide that. That's where you've interviewed a number of different players in the industry that provide newsletters and research. That's where their research comes in. It should be used complementary to what insiders are doing, but we do not provide that type of fundamental geological analysis that one has to have a certain level of understanding about when you're investing in a mining place. So, but we do cover some individuals who provide independent research on mining stocks on CanadianInsider.com through some of our posts there. We only focus, if we're going to cover somebody who's provides information on a stock, we only there's always some exceptions you find at the end of the day, but generally our focus is on independent researchers that are not in the pay-to-play space. I think you have to be very careful there. Just as you have to be careful, with insiders getting carried away with being wishful thinking. There's a lot of conflicts in this industry as well, and I'm sure you've covered that. And it's certainly, as the market gets hot and it starts to pick up again, that's where you want to use the insiders for. If you see a stock that's being promoted very heavily by newsletter writers, and you're not exactly sure if this is independent advice or not, well, just see what the insiders are doing. Are they holding on to their stock during as the stock is flying, or are they selling? So that's why it's I think a very important tool to use in this market, especially when things start to get hot. But when things are not hot, it's also it's a good tool to use to find out, are insiders picking up depressed shares? Because as a value investor, that's when you're going to make your most money, when no one else is playing in the space. With only a few people willing to take the risk of sitting on a stock that's undervalued, underappreciated. But if the insiders are also doing the same thing, then you have some comfort that you're heading in the right direction.
We'll be right back after this word from our sponsor. This episode of MiningStockEducation.com is brought to you by Sandstorm Gold Royalties. Sandstorm Gold Royalties is a different kind of gold company. They purchase royalties on select mining operations and receive a percentage of the revenue in return. Sandstorm now has a portfolio of nearly 190 gold royalties around the world. See how gold royalties differ from other gold mining investments at sandstormgold.com. That's sandstormgold.com. Sandstorm Gold Royalties trades on the TSX as SSL and on the NYSE American as SAND. Have you done any historical studies on looking at insider buying on, let's say, the Toronto Venture Exchange, and then after you see a large group of insiders buy, historically, how did the share price react the next 6 to 12 months, understanding that there's other factors that are at play, not just the insider buying? And what could we learn from any study like that?
Well, in general, what we found that the insider signals that we look at when we put it in context of valuations and price momentum, that the signals, the sweet spot is about 6 months. So even if there's an initial reaction, provided your time horizon is 6 months to 12 years, the signal should be pretty good. That's on average, okay? So clearly, there's going to be times when stocks disappoint, and there's going to be times when stocks even do better than we expect. So that's on average. That's why a diversified approach when you're following the insiders is as important as it is any time. That there's always going to be exceptions to the overall rule. But the 6 months we found is pretty much the sweet spot. 3 months to 6 months, that time frame, but the signal does persist out to a year.
When you analyze insider buying in a company's private placement, what positive things do you look for from the outsider's investor perspective?
Well, we put more emphasis on public market buying, and we also we look at option exercises. I think that's particularly important in the junior mining space. We don't put as much emphasis on private placements, primarily because generally we found that public market activity is a stronger signal. But secondly, so many of these private placements are sweetheart deals that, if you're grabbing a private placement that's below market price, got a 5-year warrant attached, well, why not, right? I mean, and that's something. I mean, we come across and we do look for private placements with sweetheart arrangements, and we do not necessarily find that as a positive sign, and it's not something we would, put out to our user base and readers and subscribers as being a positive signal. If anything, we would probably be a bit concerned about that. Especially those situations where you've got warrants that are multi-year warrants. Those are, those are never something I think you like to see.
What about options? What do you want to see when the insiders are? What do you want to see the insiders doing with their options?
Well, ideally, you want to see them, and they are a fact of life in the junior mining world.
Yep.
You want to see them exercising them and holding on once they've exercised them. Now, there's nothing wrong with exercising and taking some profits, particularly in the producers. But, you do have to look at their overall holdings. And if, for example, the CEO, I often hear a CEO say, well, I don't own any stock, but I own lots of options. Well, first of all, that's a huge red flag. If you ever hear a CEO say that, do not buy the stock, okay? Secondly, if a CEO exercises all their options and they sell everything and they own no shares, or it's just a few thousand shares, well, that's another red flag. It's what's going on here. There's very little real alignment with the shareholders. One thing in this industry, Bill, you really have to look out for not only the warrant clippers, that are get in and grab these private placements with 5-year warrants and and hope for the best. But a lot of insiders will ride these companies and just clip fees and consulting fees. So you really have to also look at not only their net worth, but you have to dig into the MDAs. Look at the related party transactions and see which consulting companies are getting, which, are being paid for out of the treasury and who's involved with those consulting companies. You have to put that all into context. So, there's a fair bit of that goes on in the junior mining space. A lot of it makes sense. I don't want to suggest that there's anything wrong with that, because in many cases that's the best way to keep costs low is that you can get a number of junior mining companies that use the pool services through consulting firms. That's fine. There's a lot of that goes on. It makes a lot of sense. But what you do want to look at is there one or two individuals that are really kind of making a lot of money here from related party transactions? Then you put their own shareholdings into context. If they're taking a lot of money out of the company and they don't own any shares, well, that would be I would just move on. Like there's got to be better opportunities in the market than to invest in a company which is essentially being run for the benefit of the insiders. What you want to look for is a balanced, common sense situation where you've got good insider commitment, where the CEO or directors and have owned shares in the company, and that they've got reasonable expenses. You're not going to run a company for free. It costs money. You do have to have an office, and you do have to have a geologist, and you do have to have a CFO. So sure, you've got to run the company efficiently. But if you see sort of some big checks being cut, take a look and see where those checks are going, and what kind of shareholding commitments and are those shareholding commitments, have they all been purchased in very kind of lucrative, but I mean lucrative, but very
financially advantageous.
That's right, financially advantageous deals. With multi-year warrants. You got to so that's when putting on the smell test becomes essential.
As you look at the Toronto Venture Exchange, specifically the resource stocks on it in 2018, regarding some of the bigger gainers, can you speak from your observation? What were the insiders doing on some of the best moving stocks last year?
Our insider indicators, and we provide this for our Inc. Research subscribers. I also reference it from time to time in Canadian Insider, and also our Canadian Insider Club members get access to the indicators via our market report. They've been very bullish. Canadian insiders, have been very bullish on the mining sector now for a while, but sentiment really peaked out here. I'm just going to pull it up now that we're talking. I was just looking at it the other day. It really seemed to peak just very shortly ago in sort of December, which is a good sign because insider buying tends to peak, Bill, when you've got peak value in the market. Okay, so in other words, insiders buy when stock prices are low. Okay, and so in that sense, it's kind of counterintuitive. Why would yours, Ted? Why would your Inc. indicators be screaming higher here when the stock price is going down? Well, that's because that's how insiders generally react. When the stock price is cheap, they buy, and when the stock price is expensive, they either sell or they don't buy. And so right now we've got a very nice bullish formation in the mining sector in Canada, and so it's hopefully signaling something positive for the year to come here. 2019, have we had false starts before? Yes, we've had. But I'll tell you, when we get to these levels that we saw last year in the gold sector, it's usually pretty strong. It's usually a pretty good signal. We've seen, for example, the ratio of companies with key insider buying to selling in terms of gold stocks, over 6-1. Well, that is a really high reading in terms of insider sentiment. And usually when you get that kind of reading, you've got a good chance that you're going to have decent returns going forward. So now we've come a little bit off that base already. We've already, the industry's already had a bit of a recovery since the fall, but we still see, based off of our indicators, some momentum that can take place here. So we'll keep an eye on it, and we'll keep watching to see, if share prices are able to kind of get back to where they were last summer. What insiders are doing at that time. Are they taking money off the table, or are they selectively adding to their positions?
Ted, as we conclude, I'd like you to share regarding the ideal person that could benefit from your services, because I believe you offer alerts too, right, regarding insider buying?
That's right. So, basically, let's look at two types of investors. if you're just looking as more of a hobbyist, I think in terms of your investing activities in the junior mining sector, you want to go to CanadianInsider.com, where we have some free information. You can, and if you like some of the reports that we have there, you can download for free. You can join the Canadian Insider Club. That's $2.99 Canadian a year. But if you're doing this professionally, full time, you want to look at InkResearch.com, where you can get immediate type alerts when there's insider activity going on. The screening is very valuable, where you can screen through the sectors and see who's buying in the sectors, and you can be alerted when there's insider activity going on. So depending on the type of investor you are, those are the two different destinations you should check out.
And if listeners want to follow you online, I believe I pulled up your Twitter. Is that at Ted Dixon?
Right, at Ted Dixon, and there's also at Canadian Insider. So we've got two handles, and the at Canadian Insider is a little bit more focused on just the markets and insider activity, or I kind of talk about Canadian current affairs too. So take your pick.
And I'm just looking here. I got to make this comment. You joined April 2009 on Twitter, so you were an early adopter, and you actually got your name as your handle. That's very rare, I must say.
There you go. Well, it's been a long time. It's I guess that was right around the financial crisis. People maybe had other things on their minds, so pick that up.
Well, Ted, I appreciate you stopping by to share your insights, and I do encourage listeners to go check out Ink Research and CanadianInsider.com, as that's the CanadianInsider.com in particular. That's something that I have used for sure to track the last 6 months of what insiders are doing. But Ted, thanks for joining me. You have any final comments?
Yeah, thank you, Bill, and keep up the good work that you're doing. That's I'm sure there'll be plenty of demand for people to get more insight on how to tackle the junior mining industry in the months ahead. So keep up the good work.
For millennia, ancient pharaohs prospered from unparalleled riches made possible by Egypt's resource-rich gold deposits. But despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. But that's all about to change. Aton Resources is leading the charge on the Egyptian mining revival. As the only public exploration company in Egypt, Aton Resources has first-mover advantage. Focused on their 100% owned Abu Marawat concession, Aton Resources is advancing several exploration targets, including the recent discovery of the legendary Lost Mountain of Gold at Rod Ruin. Learn more about this exciting drill program and other news at atonresources.com. Aton trades on the TSXV under the ticker symbol AAN and on the OTC under the ticker ANLBF. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.